Hello traders and welcome to another video review. Today is Monday, November 6, 2023. Let's take a look what's going on the Forex economic calendar today. Some data had been published overnight, of course, and we got the monetary policy meeting minutes from the Bank of Japan and the Japan Services PMI that beats the expectations of 51.1 with the actual reading of 51.6. German factory orders are better than expected. Her actual reading was 0.2% with the forecast of -1%. Nevertheless, the previous reading was 3.9%, which means this is not that good at all. We are still waiting for the services PMI from Spain, Italy, France, and of course Germany. Those data will be released between 9 and 10 a.m. today. The Eurozone Composite PMI and the Eurozone Services PMI is scheduled for release at 10 o'clock, and the Construction PMI is from the UK is scheduled for release at 10:30. During the New York session, we got Ivey PMI from Canada scheduled for release at 4 o'clock, and then we got some speeches at the end of the day from Bank of England MPC member Phil Peel, and then German Buba Maruder and German Buba President Nagel. So, as you can see, a pretty busy day for today, especially with the data from the services PMI. So, as you can see, we might have some interest in the euro today. So, this is the reason why we will start with the review of the majors, and of course, the euro dollar will be first. For our chart of the euro dollar is showing us a breakout above this short-term trend line. Let me just make it clear so it will be like orange. So above this, of course, trend line, as you can see, it was tested before, but after the NFP data, the market broke out higher above 1.0675 and above 1.0695, so those levels will be now acting as the technical support for the price. Local high was made at 1.0747, and we are consolidating around this level, just where the technical resistance is at 1.0736. As you can see, we are testing the upper channel line. So after this breakout, if there is no continuation to the upside, we might consider this movement above the channel as the overthrow, and then of course the market should move lower. However, there is still another target here for the bulls, 1.0769. This is another technical resistance, so we are trading still below it. But due to the extremely overbought conditions on the 4-hour chart, maybe in the short term we shouldn't expect much from bulls, because we need some kind of a pullback on consolidation, maybe some test of the technical support before we eventually would resume the upturn. So the outlook for the euro looks good. Nevertheless, this is still not enough from bulls, right? This is still looking slightly bearish even. Because there is no continuation over the Asian session, there's no continuation in early London trading. What I'm talking about is upside continuation, of course. So, and due to the extremely overbought market conditions, maybe for the next few hours we should expect rather a pullback than the extension to the upside. British pound is looking very good as well on the 4-hour chart, and the recent triangle, which is a continuation pattern, potential triangle of course, or even the bearish pennant pattern had been invalidated after the big and sustained breakout above the level of first 1.2287 and then 1.2336. As you can see, big momentum candles here, and now we are consolidating the recent gains in a very narrow zone, 1.2364, 1.2396, so roughly around 30 pips here. There is still a target for bulls, 1.24 21, which is the technical resistance, but due to extremely overbought market conditions on a 4-hour chart, some sort of the pullback or some sort of the test of this two very nice technical support levels might be conducted soon on the British pound market. Of course, due to this very dynamic and aggressive upside movement, the market still trades above the 50 and 100 periods moving average. We got this bullish cross here on the 4-hour chart, but we will see for how long this bullish cross will be enough on the British pound. For now, as you know, we don't have any important data to release except the services PMI from the UK. That might trigger some kind of a movement, but if they disappoint, most likely we will have some kind of a pullback on the British pound. Let me now find out what's going on the US dollar to the Japanese yen. This is the 4-hour chart. As we left it last time, we already know that this movement here towards the level of 151.73 was the swing high, so we mark it as the technical resistance again. And now we can have even other technical resistance levels. Some of them might be located at 150.59, and just above it there is a small local high, so this is a very nice zone, 150 and 79, 150.59, so 20 pips zone. Now we got the intraday technical resistance as well, just located at 149.86. As you can see, we broke below this level recently, and the next target for bulls is located here at 148.82. so this is the technical support, and of course that's not the only one, because we still have the 148.18, and the most recent one is the swing low from this spike to the downside, located at 147.39. So this recent movement to the upside, as you know, was terminated here, and this might be the swing high because it was terminated perfectly at the level of 73, which is the level on the RSI, which is the extremely overbought market conditions level. So we pulled back significantly. Now, if we add one more line to this chart, and we will take this low as a reference low, because as you can see on this pin bar, the movement up and movement down is very nice. Spread is wide, volatility was very big. So if we add this kind of a trend line, we can say that okay, the market is still trading above this trend line. Let me just reiterate the situation here. This will be the trend line, and if the market is violated, if the market has violated this this trend line, of course the outlook remains even more bearish. The momentum is negative right now. It cannot break above the level of 50 for quite some time. Actual reading is 40 points. There's still some kind of a room to the downside. There's still some kind of a room to hit the extremely oversold market conditions, but we need a breakout lower, basically. So the general outlook for the US dollar to Japanese yen is bullish. The trend is still up, but occasionally on the lower time frame charts there might be some kind of a continuation of the down move, and this very dynamic and impulsive movement to the upside, and then very dynamic reversal. So this is like a reversed V-shaped pattern, makes everything much more difficult, because it looks like the bears definitely don't want this market to go anywhere above the level of 151.73. so they should defend it. They should defend it because of this very aggressive and dynamic reversal. So please keep an eye on the current situation on the US dollar to Japanese yen, because we might be either consolidating the recent the gains. I'm talking about the bears, because they push the price lower, or we might even extend lower and cancel the at least for the time being cancel the up trend. And last but not least, let's talk about the Bitcoin, because this Bitcoin is in a very particular situation. As you know, the recent high was made at the level of $36,000, and just before that, the market has been moving in that whipsaw mode, a little bit up, little bit down, little bit up, little bit down, as it was coming off the extremely overbought market conditions. Now it's back to the range, is bouncing from the level of 50, still trading in a very tight range to 34,466 and 35,417. This is the intraday range as the market keeps moving inside of this corrective channel just below the 50 periods moving average. Any breakout higher, especially any breakout above the $36,000, which is the last swing high, would be considered bullish, as there is still a room on the lower time frames for this market to move up. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.